Good morning. We've got a big week ahead of us with the BLS jobs report coming out on Friday. All eyes are going to be on that jobs number. The markets are expecting to see 240,000 new jobs gained in the economy last month and an unemployment rate of 3.6%. Now, if those come in lower than that, either or both of those, then that would be friendly to bonds, meaning that we could see even lower interest rates and have interest rates improve a little bit as we go forward into next week. So for this week, we've got, as you can see here in my cursor, we've got kind of a tough customer here with this 200-day moving average, this blue line to get above. We're peaking above it here this morning, but can we hold on to that? I don't know. We'll see what happens. But we have seen some improvement again in pricing over the past 5 sessions over last week. Not a major improvement, but some improvement. And of course, we're up pretty healthily from those lower price levels that we saw down here a couple weeks ago. And of course, it popped up there. If you recall, we popped up there with this jagged recovery up here in mortgage bond pricing because of the banking crisis from about 3 weeks ago, right? So the past 3 weeks, we've benefited, interest rates have benefited from the economic uncertainty caused by the banking issues. So that's what we're looking forward to this year. As you can see, there are plenty of things happening in the news. There's news about OPEC cutting prices because the United States was not a paying customer like we had promised in buying more oil to refill our strategic petroleum reserve that we drew down last year. So they're retaliating against us. Guess can't blame them, but that is a negative. That adds inflationary pressures. There are analysts out there in the analyzing the oil prices, saying we could see oil prices back up to $100 a barrel, and we've been down in the 60s and 70s, right, the past number of months. So that would be unfortunate, and would certainly cause inflationary pressures, which would be something that has to be balanced in here. So as we move forward, it's going to be an interesting battle over the next few months, right, to see if we can see inflation start to come down. As inflation comes down, rates will improve, but it has to happen, and there's certainly a lot of contrary forces tugging and pulling and pushing and pulling in all directions in the economy. So it's very difficult to forecast these things, but there is still hope that as we move forward here and the economy continues to weaken, that will cause interest rates to fall, which would again cause more competition, right, for homes. There's already lower inventory this spring than there has been in many years coming into the spring season, which is, keeping prices up, right? Without a lot of supply and demand remaining it's lower than it was, but demand out there without enough supply demand thing is going to keep prices elevated and prevent a major crash. If interest rates do drop and improve over the coming months, that would add even more pressure to house prices. So we could actually see homes appreciate a bit this year because of this, economic uncertainty and because of rates coming down with low inventory. So we'll see what happens. It's going to be an interesting year. In the meantime, have a wonderful week. I'll be in touch and let you know what happened with the jobs report next Monday.